To me, I think the visible reasons for gold doing well is one, I think that there's a lot more political and geopolitical uncertainty in the investment environment because we have wars taking place. And of course, we have a president in the U.S. that I think has actually done a good job on the economy, but has raised divisiveness and uncertainty about trade globally. The second is that global central banks are generally easing. And in the U.S., we're finally getting an easing cycle, including QT ending. Mm-hmm. That should support gold. The invisible reasons are, number one, I believe Tether, which is the largest stablecoin provider in the U.S., has become the largest private buyer of gold because Tether is already sufficiently collateralized with Treasury backing every stablecoin unit, but they generate income, and with that excess return, they're buying gold.
Tom Lee explains that gold's surge isn't random. It's a response to a world that feels increasingly unstable. On the surface, the reasons are obvious. We're living through rising political and geopolitical uncertainty, with wars still active and trade tensions reshaping global alliances. Conflicts tied to Russia and Ukraine, growing pressure around Europe, and even renewed strategic attention on regions like Greenland all remind investors that geopolitical risk is back on the table. When uncertainty rises, capital looks for safety, and gold has played that role for centuries. The second visible driver is monetary policy. Central banks around the world are easing, and in the US, we're moving deeper into a rate cut cycle, with quantitative tightening coming to an end. Historically, that environment has been fuel for gold, but Tom highlights something most people aren't watching. Behind the scenes, Tether, the world's largest stablecoin issuer, has quietly become one of the largest private buyers of gold, using excess income beyond its treasury backing. That's a signal that even crypto-native institutions are hedging systemic risk. From my perspective, this helps explain why gold is surging while Bitcoin and crypto are correcting. But historically, when fear-driven flows into gold peak, profits often rotate into higher-risk assets. If macro fears stabilize, Bitcoin and crypto could be next in line. Make sure to stay till the end, as Tom Lee shares his bold 2026 predictions for Bitcoin and Ethereum. If you found this helpful, like the video, drop a comment, and subscribe. We've got more powerful clips from Tom Lee's interview coming up next.
But I think a second factor is we did a study in 2018 showing you that investment preferences skip a generation. So baby boomers loved gold. Millennials liked hedge funds. Mm-hmm. I'm sorry. Baby boomers like gold. Gen X liked hedge funds. But now millennials who are entering their prime working years like what their grandparents liked, which is gold. So I think that there's renewed interest in gold. So those are the two invisible reasons.
Why did crypto not perform last year in a way that gold did?
I think there's a time-based answer. So crypto was outperforming and keeping up with gold until October 10th. And on October, Bitcoin, for instance, was up 36% and Ethereum was up 45%. So Ethereum was outperforming silver. But on October 10th was the single largest deleveraging event in the history of crypto, bigger than what happened in November 2022 around FTX. And after that, Bitcoin lost more than 35% of its value and Ethereum fell almost 50%. So I think crypto lost its tracking to gold because of deleveraging within crypto. Crypto has periodic deleveraging events. It really impairs the market makers, and the market makers are essentially the central bank of crypto. So many of the market makers, I would say maybe half, got wiped out on October 10th. So until we get to the day where crypto is widely mainstream supported by institutional investors, the internal deleveraging events kind of knock it out of the sky.
Does that, by implication, mean that you accept that Bitcoin is not digital gold?
It's Bitcoin is digital gold, but the universe of people that believe that thesis is not the same universe that owns gold. And so crypto still has I think, future adoption curve that's higher than gold because more people own gold than own crypto. But the path to getting that adoption rate higher is going to be very jagged. And I think 2026 will be a really important test because if Bitcoin makes a new all-time high, we know that deleveraging event is behind us.
And your price target for Bitcoin this year is 250,000.
Yeah, so we think Bitcoin will make a new high this year.
And that's driven by what?
Well, it's driven by, I think, the usefulness of crypto increasing. So we know banks, for instance, are recognizing blockchain, and the idea of settlement and finality work really well on blockchain. And then a company like Tether, which is a crypto-based bank, is proving that a bank that emerges natively on blockchain is actually better than a traditional bank. For instance, Tether is expected to make almost $20 billion in 2026 earnings. That would make it a top 5 in terms of bank profits. They, on valuation, might be number 2 only to JP Morgan, twice the valuation of Goldman Sachs or Morgan Stanley. Tether only has 300 full-time employees. JP Morgan has 300,000. So by using blockchain, they make almost as much, well, they make more money than any bank, and they only have less than 1% of the M1 money supply and a tiny balance sheet, and yet it's one of the most profitable banks in the world.
But you long-term see Ethereum as more of the bull case. Why did it fall so much back quarter of last year?
Ethereum is the second largest blockchain, and it's, I think, always going to be more volatile than Bitcoin until it becomes similar in size. The crypto world views Ethereum as a price ratio to Bitcoin. So there's this, if you just simply said ETH to BTC, assume Bitcoin is the price denomination of the crypto world. Ethereum's price ratio to Bitcoin is still below where it was in 2021, 4 years ago. And that, compared to 4 years ago, Ethereum is a far superior blockchain because we know tokenization, including dollars are tokenized, is one of the big bets Wall Street's making. I mean, Larry Fink says it's the biggest innovation since double ledger accounting. Vlad at Robinhood wants to tokenize everything. And we already see a lot of effort to tokenize not just dollars, which is stable coins, but credit funds. JP Morgan is launching on Ethereum a money market fund. BlackRock has already tokenized credit funds on Ethereum. So Ethereum is really the blockchain that Wall Street is beginning to use. If Ethereum's price ratio recovers to the 2021 highs and Bitcoin goes to 250, Ethereum would be around 12,000. And Ethereum is around 3,000 today. I think the most important advice I can give people is that trying to time the market makes you an enemy of your future performance. Because a lot of investors always only want to buy at the bottom and they want to sell at the top. But when we look at the stock market, and actually in crypto too, the only people who really make money are those who are investing for the long term. So as much as I'm warning about 2026 and the possibility of a lot of turbulence, they should view the pullback as a chance to buy, not the pullback as a chance to sell and to avoid stocks. I think it's a really important distinction because too many people sell on emotion and then they don't make the second decision to buy back. And then they miss out on all the compounding investing delivers.
And my second question is, what's your overriding piece of advice for crypto investors over the very long term? I'm sure it's slightly linked to what you just said, but how should they be exposed?
Yes. Well, I believe many listeners are skeptical of crypto and might even have zero exposure and say that they don't really understand it. one of the things that we have to appreciate is that crypto is being adopted by the younger generations. I mean, it is a part of their lives because they are digital natives, and there is really a blurring between what's a service and what's money in the future. It's no different than in 1995 when Bill Gates was on Letterman talking about the internet. David Letterman expressed enormous skepticism of like what the internet was because he was the wrong generation to adopt the internet. If Bill Gates was explaining that to a 20-year-old, a 20-year-old instantly understood the future of the internet. And I think that's what's happening with crypto today.